A range-bound session sees Sensex and Nifty end in the red. Broader markets outperform. Nifty Bank gains 0.25%, while mid-cap index is up over 0.5%. Consumption names underperform. Capital market plays fly.
Asian Paints gets a coat of red, falls 3%. Investor call points to challenging demand conditions that will keep volume and value growth in check. Titan misses the margin estimates following a one-off inventory loss due to import duty revision on gold. Stock down 3%.
OpenAI CEO Sam Altman says India is the company's second largest market and users have tripled last year. Meets IT Minister Ashwini Vaishnav and is set to meet Prime Minister Modi. OpenAI is facing a copyright lawsuit in India filed by top media outlets. Hello and welcome to a fresh new edition of Markets Forward, your go-to program where we aim to get you everything you need to know as we come back tomorrow. I'm Prashant, with me, my colleague Rima. Rima, hi.
Hi, a good session, right? Particularly for the mid-caps, small caps, which made a comeback.
Absolutely, and I think that was also much needed because large caps had not fallen as much. Small cap index from the high to low was down 17.5%. It had recovered the least, but I think today caught up to some degree. So that basically was the story. By the end of it, Nifty slightly down, Nifty Bank doing a little better, mid-cap index doing much better, and the small-cap index doing the best. So, in varying degrees and in ascending order, in that order, and enough and more action. If you want to see what was down in terms of relatively larger names, it was all consumption. Asian Paints, Nestle, Tata Consumer, and so on and so forth, Britannia. These were the 4-5 top losers on the Nifty, all consumption names. On the other side, what came back after a while really is capital market plays. There was that Kotak note, and Vamakshi will outline that in just a bit. But the Nifty capital market index will come up on your screen, and that was up at one point about 5%. Your Novamas of the world and K-Fintech and CAMS and Angel Broking and AMCs, that entire part looked very, very good. And Vivek will have more on that in a bit from now as well. So, a pretty decent session for portfolios for the broader market, even as the Nifty took a bit of a break today. Rima.
Well, it took a break because many of these consumption names, heavyweights, were under pressure. Nifty Realty and the Nifty FMCG Index both down over 1.5%. On the way up, the Nifty Capital Market Index, that was up nearly 4.8%. Metals, PSUs, and even PSU banks were up nearly about 1%. The mid-cap index ending with a gain of about 0.7%, but it did come off from the highs. But let's tell you what we have for you on our show. The top movers and shakers of the day. The stock of the day was Asian Paints, Titan, Angel One. We'll get you more details on these. And then the key market events to watch for. But first up, it's over to Vivek now. He's at the big wall with the top stock movers of the day.
Well, when you're talking about the top stock movers of this particular day, have a look at the entire pack. The list of gainers that will come up on your screen. The oil and gas stocks are the one that we're looking at. There was an upgrade coming in on the OMCs as far as Goldman Sachs was concerned. So names like HPCL, BPCL, IOCL, they did very well. IGL as well as ONGC too, they also topped. In fact, IGL ended the day higher by over 5%. Abbott India, one stock from the broad end of the markets, delivered its results today. Very strong set of numbers. The stock ended higher by over 6%. Remember, the high-price stock on good volumes as well. One from the broad end of the markets, given the fact, like you mentioned, the small cap index that saw maximum moves today. Navneet Education, strong Q3, over 6% higher. And one from the jewelry pack, Tangamail Jewelry, this particular stock at one point of time almost near the upper circuit, but ended the day higher by over 9.5%. And Arif Life Sciences, remember, yesterday was a very strong mover after a good set of results. Yesterday evening, the company in the conference call said that it's launching GLP-1 for the Indian markets, and after that, the stock ended higher by over 11% in today's trading session. On the other hand, which are the list of stocks that actually saw some negative reaction, the entire FMCG pack, muted demand commentary coming in from some of the FMCG majors. So all of these stocks took a bit of a knock and some profit booking as well. Asian Paints, Titan, Nestle, Britannia, IT, all of them saw selling pressure today. And the other set of stocks that ran up and once again saw profit booking coming was the entire real estate pack. In fact, names like Soba, Prestige, Godrej Properties, all of these stocks saw selling pressure today. Thermax, weak set of results yesterday, weak commentary coming in. That stock ended low by over 5%. And Page Industries, volume growth missing estimates, and that stock too, amongst the F&O pack, saw quite a bit of selling pressure emerge, especially in the last half hour of the session.
Thank you very much for that. Even these new age tech companies, Swiggy, Nykaa, down nearly 2 to 3%. Mayuresh Joshi, Head of Equity Research at William O'Neill, and Shrikant Chauhan, EVP at Kotak Securities, are with us on the show now. Shrikant, you go first. Yesterday was a big day for the frontline indices. Today, a bit of a pause, consolidation. How do you expect tomorrow to be, and any trade from an index point of view?
Yeah. Good evening, Riba. Good evening, everyone. I think, Nifty is consolidating, and it seems that it has taken a pause after rallying almost 900 points from the lower levels. Maybe 23,600, 650 going to act as very good support. If we see any correction, then there we should look for taking some long trades in the market with a stop loss close to 23,500. In fact, this particular zone is going to act as major support, and in the near term, I'm expecting Nifty to move towards the levels of 24,000 or maybe 24,200. So certainly it's a buy on dips sort of market, and we should look for adding position if there is any correction in the market.
Mayuresh, you think broader market recovery will continue?
So Prashant, as of yesterday, with the move that we saw, we have put the markets in a confirmed uptrend, which basically means that it does seem plausible that the few large mid-ish names within the broader market might do well. And when earnings are held up, I think selectively pockets within the broader market should continue doing.
Let's get to the stocks of the day. Titan was down nearly about 3% as the company's margins missed the street expectation. Even the commentary. Asian Paints is the other one where the stock was under pressure as the commentary pointed to a challenging demand environment. Mangalam is here with the details.
Well, for Asian Paints, it was the top Nifty loser today. The company reported its numbers yesterday during markets, but post-markets, when we had the conference call where the management did allude to, no improvement in the fourth quarter either. There is continued stress in urban, and they are expecting low single-digit sort of volume growth to continue even as they improve quarter on quarter. The company is still 2 quarters away from double-digit volume growth, and at the same time, the competitive intensity is high as well. That caused the stock to decline in today's trading session. Remember, after having corrected about 30% from the highs, the stock is still trading upwards of 48, 49 times FY26 price to earnings. So brokerages saw limited upside in Asian Paints from current levels, and most of them are awaiting better entry points as well. So the brokerage commentary comes up for you on the screen. Most of them have pared their estimates by around 4 to 5% and have underweight or underperform ratings itself. For Titan, however, remember the company's operating performance was marred by a one-off. We spoke to the management today. They target 20% annual growth in the jewelry business. The third quarter had 25%, obviously, because it had the festive season impact as well. But on a year-to-year basis, they are also expecting 11% margins in the jewelry business, however, to sustain. Remember, the margins earlier for the company were closer to mid-teens itself. So now the street is adjusting itself to the lower new normal for the margin in the jewelry business for Titan. And they haven't yet announced lab-grown plans in public yet, but I'm sure something's under works, is as per the management who spoke to us here on CNBC-TV18 today.
The growth which we typically look at every year is in the ballpark of 20% from an annual point of view. And that's the kind of thing that we would be satisfied with rather than continuing to maintain the 25 in every quarter. So the long runway in terms of growth and our having just a single-digit market share, our focus continues to be on sales growth and with a stable margin around that 11% ballpark. That's what I would gun for. That's what we are pushing for.
I think what was very clearly visible was that the urban centers were not batting. And as you rightly said, there has been down trading in terms of the market, in terms of what we have seen. I think what was more complex also that, the festive season was very, very short. It was a shorter Diwali to that extent. So as we see, I think the month of October really kind of impacted us very highly in this quarter to that extent. So I think that is what possibly has impacted the overall growths in terms of what has come in. As we go ahead, we are looking at single-digit volume growths for quarter 4 for definitely in terms of what we would kind of really endeavor to get as we kind of go forward.
Okay, well, from FMCG names, and we'll come and get some views from our guests in a bit. Capital market plays were the other area, right? The index itself about 4-5% higher. Angel, the broking companies and the capital market infrastructure names, RTAs, AMCs, I mean, you name it. There was that Kotak report as well, which I think added fuel to the fire. Vamakshi is here to wrap up that for us. Vamakshi, over to you.
Well, absolutely, Prashant. All of these capital market plays were in focus today, starting with Angel One on the back of its monthly business update. Cross-client addition was down nearly 15.4%. In fact, the client acquisition slowed down after seeing a good uptick in the month of December. Client base, however, steadily grew by 2.1%. Average daily orders were down 3.7% month-on-month, but the average daily turnover actually recovered. It saw a growth of almost 6.3% on a month-on-month basis as compared to the sharp fall that we had seen in the month of December. The company also managed to improve its market share across segments, which includes equity, F&O, as well as the commodity market. In fact, apart from that, there's a note that came in from Kotak as well on the capital market theme. They say that recent correction across AMCs, RTAs offer a more reasonable risk reward. For AMCs, they expect HDFC, AMC and Nippon Life to deliver high AUM growth over the next couple of quarters. As far as ABSL and UTI AMC are concerned, they say that they have been showing signs of performance revival in select large funds, but they still await stronger signals to turn more assertive. Despite that, they've gone ahead and upgraded HDFC AMC, Nippon Life AMC to add. They've gone ahead and upgraded UTI AMC to buy, and they've retained an add rating on ABSL AMC. RTAs were also in focus today. Kotak has gone ahead and upgraded its rating on CAM to add from reduced target price at 4,000 rupees per share. They say that the valuations here are more reasonable. Yield-related and capital market headwinds are already baked into the assumptions. But that is not the case for KFin. They believe they like the progress with the non-MF segment execution, but they are waiting for better entry valuation. So given that, they have a sell rating on KFin, target price at 1,000 rupees per share.
Thank you very much for that. Let's address all these buzzing stocks. Mayuresh, first on Asian Paints, stock prices typically bottom out before business bottoms out. So do you think Asian Paints is at that stage right now, or do you expect more price correction?
There is a possibility because of the down trading, the competition that is playing out in terms of pricing, and therefore how volume will play out. The management has made it very, very clear that Q4 will also be very, very soft. And therefore, how do discretionary trends come back? Obviously, with the rate cut bonanza announced in the budget, the slab cut bonanza announced in the budget, what you probably expected to see is some element of demand coming back by the first half of the next financial year. But till that point of time, my own sense is that it might just continue with this underperform track.
You know, these capital market plays, what's your view, Srikanth? Any thoughts? Anything what's looking the strongest in that sense?
Yeah, Prashant, if we go through with all these 3-4 stocks, then in that specifically, I would say this particular HDFC AMC, that one is much better. It is holding above its important support levels. And whenever there is like a fall in the stock close to 3,700 levels, we saw good amount of recovery towards the levels of 4,000, 4,500. So at these levels, the risk reward ratio is quite favorable for creating any positional trade. And also we like CAMS, where we are like, we saw a very sharp sell-off in last 2 months. From the levels of 5,500, it fell to the levels of 3,400, and now again it is bouncing back. So at this level, there also I'm expecting very strong bounce back towards the levels of maybe 4,000, 4,400. So at this level, CAMS as well as HDFC AMC, we should look for adding.
Yeah, the one is Aditya Birla AMC, right? 900 to 600, and it's recovered 20%. Actually, most of these stocks from their absolute lows, but nobody buys at the absolute low, have come up between 15 and 20%. Including the names that Srikanth mentioned. Oil marketing companies were the other ones. They gained between 2 and 3% after falling sharply yesterday. Goldman Sachs has upgraded their view on these stocks. Sud is here to tell us why. Sudarshan, over to you.
So oil marketing companies are down in the range of 20 to 25% from their peak that they had hit in early 2024. But in the last few days, all these three names have moved somewhere higher by 5 to 6%. And this is after Goldman Sachs has come out with a note upgrading all the three names. It has upgraded BPCL and HPCL to buy and IOC to neutral. For HPCL, target is rupees 400 and BPCL, it's rupees 360, implying upside of 17 to 38%. But for IOC, it sees a fall from the current level, and target price for IOC is rupees 110 per share. For HPCL, it sees 40% EBITDA CAGR over FY25-27. For BPCL, it estimates 10% free cash flow yield in FY26, and for IOC, it believes that risk reward is favorable. Now, giving the rationale behind the upgrade for all these three names, it says earning risk related to lower discounts, lower crude discounts, and the LPG under recovery are priced in. And second, FY26-27 setup is improving for OMCs given its target for lower crude price. By 2025 end, it believes that Brent would be around $70 per barrel. Also, it is constructive on Singapore refining cracks and free cash flow, which is a key metric for all these three names. It believes that FCF will recover in FY26. And considering all these factors, it has upgraded all the three names, BPCL, IOC, and HPCL.
Thank you very much for that. We'll also thank our guests for joining in this afternoon. We'll slip into a break. On the other side, the top corporate voices and the key market events to watch. Welcome back. Let's get you all the big voices from the corporate world. First up, Happiest Minds, Venkat Narayan said that the firm was hopeful of hitting or coming close to the 30% revenue aspiration for FY25. This is on the back of consolidation in Middle East and an organic growth pickup in Q4. They also added that they are holding on to their FY25 EBITDA margin guidance of 20 to 22%. Speaking about the AI play, the company said that they've got 2 customers who progressed from proof of concept for generative AI deals. So they're moving from POC stage to product implementation stage.
Okay, well, we had Krishnan Ramachandran of Niva Bupa who joined us early in the morning after their third quarter numbers. It's, of course, a recently listed insurance company. They told us that for the 9-month ended period, FY25, things have been better on a year-on-year basis. Added that the market would grow at a CAGR of 15%, and Niva, like it has done in the past, would continue to sort of add 8 to 10% on top of what the industry is already doing. He said the aim was to balance growth with profitability.
And Anand Agarwal of VMart told CNBC-TV18 they're seeing a strong revival in Tier 2, Tier 3 markets. He attributed the company's performance to a revival in demand and its own internal strategies. Looking ahead, he said the target was to achieve double-digit same-store sales growth and 12% EBITDA margins.
All right, let's get you quickly some of the events to watch out for as we come back tomorrow. There are some earnings, especially from the consumer side. Mangalam is here with that list. Mangalam.
Well, it's a big day tomorrow. It's Thursday, so it's obviously Nifty weekly options expiry. And speaking about the Nifty itself, there are 6 Nifty earnings that are due tomorrow. So we have Bharti Airtel from the consumption space. We have ITC, Britannia, Trent. And then you have SBI and Hero MotoCorp as well. The other important results from the F&O space, we have Apollo Tyres, Aurobindo Pharma, BEML and MRF, all of them reporting their numbers. So a very earnings-heavy day. But you're also looking at some global macros. So Bank of England, the interest rate decision, whether they go ahead and cut them or not is the big question that everyone will get an answer to. USA's initial jobless claims data comes by as well. And ahead of, tomorrow's the SBI earnings, and day after, all eyes will be on the Nifty Bank itself because of the RBI policy outcome, the first monetary policy of the new governor. So all things considered, next 2 days, very event heavy.
Indeed. And before we wrap the show, OpenAI CEO Sam Altman said that India is the company's second largest market. Users in India have tripled in 1 year. Sam Altman landed in India just late last night yesterday. Today, he met the IT Minister Ashwini Vaishnav. And he's all set to meet Prime Minister Narendra Modi. Remember, this comes in the backdrop of OpenAI facing a copyright lawsuit in India, which is filed by the top media outlets. Ashmit Kumar reports on Sam Altman's India plans and his day in the national capital.
Sam Altman's whirlwind tour of Asia comes to India after his Korean leg of the journey. He landed in India late last night, and this visit comes amidst a growing realization and understanding within India of the importance of building India's own foundational large language model, its own AI model.
India is an incredibly important market for AI in general, for OpenAI in particular. It's our second biggest market, tripled users here in the last year, but mostly seeing what people in India are building with AI at all levels of the stack. Chips, models, all of the incredible applications. So I think India should be doing everything. I think India should be one of the leaders of the AI revolution.
Interestingly, this visit by Sam Altman comes at a time when India has announced its own mission of developing its own sovereign AI model. It also comes at a time after Sam Altman in 2023 had said that it was hopeless for India to compete with developing its own foundational model. And also interesting because it comes after DeepSeek disruption, delivering an AI model at a fraction of the cost of the investments made by OpenAI.
We're now in a world where we made incredible progress with distillation. We learned a lot to do small models, and these reasoning models in particular can be, it's not cheap, it's still expensive to train them, but it's doable. And I think that's going to lead to an explosion of really great creativity.
Taking cue, even the Indian IT minister said that with costs progressively coming down for building an AI model, India hopes to replicate the DeepSeek success.
Every year, it's 10x reduction in the cost of intelligence. That kind of innovation can come from anywhere in the world. Why shouldn't it come from India? That's the point.
And while there's a lot of excitement within the Indian startup community, the understanding is that while India is great at building applications, but there's a lot of ground to cover for building your own foundational model.
OpenAI is thinking of open sourcing as a serious topic on the table. We all want to put the bet right away in the ring, saying that here comes the foundation model, but there is a calibrated approach, and there was a lot of acknowledgement that I saw today.
I don't completely agree with the premise that India is lagging behind. I think Indian startups are innovating in areas where they understand best and they have core competence in.
I think we should definitely win the application layer. We have to do a lot at the model level. I don't think we are as close to building the next DeepSeek at all. But application layer is definitely which can be a moat. I think every organization should put aside an R&D budget for AI, and we should build applications using AI.
Sam Altman called on Indian developers and Indian startups to build solutions on top of their foundational model. But with increased talk of ChatGPT going open source, there's a great deal of excitement on how India can exploit this opportunity. In New Delhi, Ashmit Kumar.
Well, that's a great report from Sam Altman's visit to the national capital and all the happenings there. Well, it's a wrap on this edition of Markets Forward from Rima, me, everyone in the program. Thank you very much for staying with us. News and updates follow after a quick break.